Hi, good morning and welcome to ET Now. You're watching Buy Now, Sell Now. I'm Bata and along with me is Cheryl D'Souza. We're joined by a very special management this morning, Cheryl. We have the CFO of Bata, Mr. R.K. Gupta, with us. Good morning, sir, and thank you for taking out the time to talk to us here on Buy Now, Sell Now. Of course, there's a lot to discuss with you and touch base on, but let's begin with the demand scenario. How is overall demand currently panning out compared to the recent months that have just gone by? And how far are you exactly from pre-COVID levels?
Demand and recovery is shaping up. If we compare in last two quarters, means quarter one and quarter two, for sure demand is increasing. But if you ask whether we are at pre-COVID level, answer is we are still far away. We are hopeful that by end of next quarter, we expect to achieve pre-COVID numbers.
Right, Mr. Gupta, that's heartening to know. And are you witnessing a pickup across categories, or is there any special category which is standing out? Also, how are the footfall trends been recently?
Footfall, again, if you compare against pre-COVID level, not at par. But if we compare against previous quarter, yes, for sure these are increasing. Up till last quarter, means July, September, more or less malls were not open. In this quarter, October, December, most of the malls are open, and although customers flow is less, but they are moving. As far as categories are concerned, means dress shoes, casual shoes are not at par, but low price merchandise, open chappals, open category, they are giving fruitful result and they are as per our expectations.
Good morning, Mr. Gupta. This is Cheryl also joining into the conversation. Let's talk about rent and other expenses. If you look at them, they've actually reduced considerably during this period. But as things normalize, could we expect these to go ahead and impact your margins? What's your outlook for the margins going ahead then?
We are working towards improvement in our margins. For sure, in this quarter, there was some pressure. This was due to promotional offers, some additional markdowns in our stores. Factories were not working at their full capacity. Thereby, we were making some under recoveries in our own manufacturing units. However, going forward, now factories are working at full capacity. Markdowns are no more in the market except some categories. We are expecting a considerable growth in our margins in the coming quarters.
All right, Mr. Gupta. Also, what's the percentage of sales currently, how much percentage of the sales actually currently comes from the e-commerce channels? And what is the growth in sales through digitally enabled platforms going forward? What's your outlook on that particular front?
In fact, with the help of induction of B2C business at digital platform like Myntra, Amazon, etc., there is a decent growth in our e-com business. We are expecting that this turnover will constitute around between 12 to 15% of the total turnover.
Right, Mr. Gupta, and could you tell us how the demand is faring across your various tiers? So tier 1, tier 2, tier 3, tier 4, and then is urban now also seeing a sharp pickup?
You see, means up till last quarter, demand in urban was less as compared to demand in tier 3, 4 and 5. Means as we discussed, low value merchandise are selling much more as compared to the previous quarters pre-COVID level. However, means now since malls are open, customers are going to their office, to their workplace, demand in urban also increasing. And we expect that by end of June, demand will come to the normal pre-COVID level, whether it is urban or smaller towns.
Right, so then will you be expanding your footprint in the smaller towns in tier 3 and 4 to capture higher market share?
You see, in 2020 also, means last year, in spite of COVID-19 pandemic, we have opened around 60 franchisee stores, mainly in rural areas. Same trend will continue in 2021 also. And this year again, we are planning to open 50 to 60 franchisee stores in interior markets, tier 3, 4, and 5. We expect there is a reasonable opportunity potential where we can reach to our customers through this penetration.
Mr. Gupta, if you see currently the unorganized market is approximately 75% of the production in the country. While most consumer brands actually feel that there will be a shift to organized players from the unorganized sector, do you also echo the similar sentiment?
Means we are working towards this. You know, Bata is known for the quality product. If you compare quality of our product versus unorganized market product, means there is no comparison. Our customers are with us for last number of years. When they feel comfort, then I have my doubt that they will go away for cheaper product. We are expecting that during 2021 and years after that, we are expecting increase in our market share, and there will be a reasonable growth in our numbers.
Mr. Gupta, could you also tell us about the volume growth trajectory that Bata is looking at going forward?
You see, when business is less due to pandemic, then growth was not there, neither in volume nor in value. However, if you see our last quarter, means October, December, there was a growth in wholesale category about 3% compared to the previous quarter, compared to the previous year, same quarter. However, retail pairage growth was down. It was down by about 17-18%. But now we expect with the opening of offices, opening of schools, we will gain in volume also at the same time with turnover also.
Right, Mr. Gupta. Well, it was great catching up with you this morning and figuring out exactly what the challenges were this quarter. From what we understand, it looks like the road ahead seems a lot better. Thank you so much for giving us your time this morning. On that note, let's slip into a very quick break here and buy now, sell now. Stay tuned. We'll be back in just a minute. Hi, welcome back to ET Now. You're still watching Buy Now, Sell Now. Let's get on with the regular course of the show. And of course, Discussing our viewer queries is always on our top agenda, and we have two experts today, Kunal Batra and Shaina Muqaddam, who are with us to talk technicals and fundamentals. Good morning and welcome to the show, to the both of you. Great to get perspective from you all as always. Kunal, coming to you first. Last couple of days has not really been very exciting, at least as far as the benchmark is concerned. Where are you finding value still, and what are your calls today for our viewers?
Morning, Varun. Yes, and I believe that this is this could be I would believe a normal course of the market, which you could probably see over the next few days, because it's not natural that the indices go through somewhat of consolidation. But if there's no excitement on the index, on one hand, there is a lot of excitement on the stock specific front, and I think this time around as well, like what we've been accustomed to since last 8-9 months of this strong price recovery, is that every new market trend, whether it's consolidation or a rally, leads to an emergence of a new sector, which leads to the upside. Now, in the last couple of days, we've seen many of the PSU names, PSU stocks and the PSU banking names making a very strong and roaring comeback. So I'm highlighting two stocks in that space as a strong potential of buy candidates. First one, which I'm suggesting, is Aban Hindustan Petroleum. That stock has charged up extremely strong. In fact, today morning as well, I had given a call on HPCL on the show, on the morning show as well, expecting the stock to move up to almost 250 to 55 levels. So the stock has already moved up more than 4.5-5%, but the way in which the stock has broken past about the resistance, I think is just quite noteworthy. So I'm raising my targets higher from those levels of 255 and revising it higher to almost 275 from current levels. So expecting another approximately 10% upside on HPCL. Stop loss could be tailed higher to 235 for someone who's looking to enter at current levels. The second stock is again from the PSU name, PSU banking stock, and that's about Canara Bank. We've seen a very strong pickup in many PSU banking names, especially the non-FNO ones like Union Bank, Bank of India, etc. But even Canara Bank and other names on the FNO side as well are looking quite strong. In fact, Canara Bank was consolidating around this 165 to 170 zone for quite some time. So I believe that this consolidation seems to be getting over, and the stock could be in line of breaking back above its major swing highs as well pretty soon. So a buy on Canara Bank with a expected target of approximately 180-182 range, and stop loss could be kept at 165.
Okay, so those PSU banks are definitely still in flavor. Shaina, good morning. Great to have you with us. What's on your radar today? Any calls for our viewers?
So basically, I have two picks for today. These are longer term bets. These are in the building material space. First one is ACC and second one is Pidilite. Actually, I've picked up these two because we have seen a good growth in terms of sequential growth, in terms of volumes for both of them, and also you've seen good infrastructure spend that is expected. Rural demand is picking up. I think both of these will benefit from that. The whole building material space is looking quite healthy going forward. The first one, ACC, I've picked it up because if you see the last quarter numbers, they were slightly below market expectations. That is because the EBITDA took a hit. There were one-time hits and EBITDA margin also was hit. But recently, ACC has taken a price increase. I think going forward, this will support the EBITDA margins as well as profitability. Also, in terms of capacity, they are adding capacity, which will give them a better hold on the eastern side. All in all, I think in terms of valuation also, it is very attractive. It is one of the most attractive with EV by EBITDA of just about 10 times. The second one is Pidilite. Pidilite, there the company is launching 2 to 3 new products every quarter. So I think that will support a good growth going forward. Even the acquisitions that they made, that should support a good growth going forward. In terms of valuation, it is very expensive. But with the promoters holding almost 70%, more than 70% equity stake, I think this is one stock that will continue to enjoy premium valuations.
Some interesting picks coming out of there as well from a fundamental standpoint. So let's move on then with our queries. We have a lot of people writing to us, and they obviously are looking at their own stocks and they need advice. So Lakshman S is the first person who's contacted us via Twitter. He's bought 50 shares of Hindustan Foods at 1850 per share. And he's looking to hold this stock for 2 years, so quite a good long time frame. Kunal, Hindustan Foods, it's been a very good performer. And the chart, I know a lot of people have said it's quite a decent chart. What's your take? And can Lakshman here stay invested? And if so, any indication of how much upside might be available in the near term?
I think the stock has done exceptionally well over the long term, and I think if I'm not wrong, it's priced at more than 15,000 rupees. We've seen very good volume pickup as well for this stock. So I think in that sense, it's one of the few names, rather 2,000 rupees. It's one of the few stocks which has gone through those classic patterns. We see those stock rising up high, consolidating for almost 1 month, and then moving up higher into a new trajectory. Very good signs of trend picking up. The only catch, rather two of the catches, one of them is the low liquidity, because that's the biggest catch into many of these names. You don't find these stocks to be amply liquid enough. I think, if I'm not wrong, the average trading volume for a stock like Hindustan Foods is just around that 5,000 to 10,000 shares every day. So there is this big illiquidity concern, because what happens is when the markets are roaring quite up and strong, these stocks, they would look very attractive because of the way in which the prices move up. But if there's any kind of a contraction in the overall index, and if the mid caps also start to go through a corrective phase, these stocks, or the illiquidity on the stock, will hurt exit for many investors on the long term side. So that's the only biggest catch for a stock like Hindustan Foods. But nevertheless, I think the stock trend is quite attractive. I think if you've already purchased the stock, then I believe you should hold on to it. I would suggest a trailing stop loss of approximately 1800 to 1850, and you can keep on revising the trailing stop loss as and how the stock keeps on moving up higher.
Okay, thanks for that, Kunal. Shaina, how about you? Fundamentally, is Hindustan Foods an expensive stock relative to the growth prospects that lie ahead? What's your view? Can one stay invested? Should one invest now? Wait for a correction, perhaps?
I agree with Kunal. The stock has actually gone up substantially. If you see in the last 2 months, it's almost doubled. And of course, this is some bit news driven, because they have announced recently that they are setting up contract manufacturing facility for foods and beverages for some large FMCG. Having said that, in terms of valuation, as you asked, is extremely expensive. So I would be cautious. I think both the segment, the balance sheet, everything is working for the company. But if you look at valuations, it's extremely expensive. Stock price movement has been very sharp in the recent past. So I would keep a strict stop loss, close to the buyer's price of about 1,800, 1,850, and ride the upside. But I see upside to be limited because of the expensive valuations. I don't see the stock giving you more than a 10 to 15% return over the next 1 odd year.
Okay, great. So Hindustan Foods, obviously a good company, very good price action, but at 131 times price to earnings, it's a bit expensive. And if we do get into a correction, you might have trouble, given that it's not a very liquid stock. So that's the summary for that. Let's move on. The next stock is much larger. Liquidity shouldn't be an issue here. But again, it's Lakshman who's writing to us, and he's also looked at Info Edge, right? He's actually entered the counter already with a 50 share buy at 5,000 rupees per share. So 2.5 lakh rupee investment, and he'd like to know the outlook. So Kunal, technically, recently they reported numbers. They weren't particularly good, but the stock didn't crack that much either. Again, a very expensive stock. What's your reading over here? Can one stay invested, or what do you think would be the best move going forward?
So I think, first of all, I think it's a good stock to really look at from a long-term investment. Now, when you have a history of the stock, last 5-6 years, I think from 2014, when the actual real rally started for Info Edge, when the stock was priced at, I think, 300 or 250 odd rupees. From there on, I think the real move actually started on the upside. In fact, if you draw, a very simple and a very, straightforward trendline support from those, 2013-14, lows of 250, 300, I think from there on, the stock has taken a very classic kind of a support at a rising trend line. And, that support trend line, of course, from a long-term basis now comes closer to 3,000, 3,500 kind of a zone. Of course, those are very strong and far-fetched kind of, support levels. But nevertheless, it indicates that the stock is into a very strong uptrend. Now, the idea with investing stocks like Naukri, etc., or Info, etc., is that you need to have a longer term time horizon. Because these stocks, they will actually unleash their real, I would say, trend kind of a returns on a longer term basis. So it's possible that because of this 6 month, 9 month of uptrend, it's possible that the stock may consolidate for some more time, just about meander at the 5,000 mark, plus or minus 100, 200 rupees odd levels, and give you those odd, high paced rallies and high paced corrections in between. So if you're ready for a longer haul, then I believe it's a good stock to own. As a also as a strategy, I think if the stock comes back closer to this 200-day moving average, which I think is at 4,700, 4,750 levels as of now for Info Edge, I think that could be a good level for you to average it out further. So hold on from a longer term view and look to average on dips is my advice on Info Edge.
Thanks for that, Kunal. Shaina, what about you? The Zomato listing is obviously a big trigger here, but it's a very expensive stock. Would you buy at current levels?
I hold, and I would recommend that anybody who's holding this stock continue holding it, because while, as you also mentioned, that the ITES business, core business, the bookings were below market expectations. They're expected to look up, but the core business, in my view, accounts for just about now half the valuation of the company currently. The main upside and what is going to trigger any movement up or down will depend on the valuation that the market gives to Zomato and Policy Bazaar as and when they list. So these are investments that InfoHedge has in these companies, and as and when they list, depending on what the how the shareholders of InfoEdge will be rewarded when the value unlock happens, that will drive the price of InfoEdge one way or the other. I think if the management is rewards the shareholders adequately on the value unlock, I think there is a tremendous upside from here on. So I would recommend that any dips, maybe keep a stop loss of 3,500 if you're holding, but any dips from here, one could keep adding, for the longer term, because they have got very good properties in their portfolio.
The take coming in from Shahina as well for Info Edge. But let's get on to our next viewer query, and we've got one from Rohan Shah, who is asking that whether we can enter Tube Investments at current market price. Kunal, I'll come first to you on Tube Investments. If you see the last 5-day performance of this particular company, up about 8% in trade, how are the charts looking? Is it attractive, worth buying at current market price?
Attractive, but again, I think the catch and the caveat would be very similar to what we discussed in a couple of queries back. That these mid-cap stocks, they will tend to do pretty well in periods of high volatility, in periods of high market trend. But if there is any kind of a consolidation, then these are the same mid-cap names which will go through a sharper correction. So I think it's good that many of the viewers are looking at investing and looking at these mid-cap names. But then there has to be a bigger catch that the market goes into even a slight reversal mode or a corrective mode, or even a 4-5% assumingly over the next few weeks. Then it's possible that many of the mid-cap names could also go through a sharper period of correction. So I would advise that if you're looking at buying on Tube Investments, if you've already bought, then look to size it up as the stock gives you a round of correction. Maybe if it comes back to those 1 week lows, 10% lower from current levels, that could be a good level for you to average it out further.
All right, that's the take coming in from Kunal on Tube Investments. Shahina, what about Tube Investments? An attractive buy at current market price?
I would wait. If I'm holding, I will continue holding. But if I want to buy, I will wait for dips. Two factors. One is, if you see in the last 1 year, the stock has gone up, 4 times. Okay. In terms of valuations, it is extremely expensive. And especially it has gone up after the acquisition that they made of CG Power division for almost 700 crores for 50% equity. So all these things have to actually play out in the numbers. While, balance sheet is strong and the group is, that has shown their conservative ability to grow the businesses, but I think that valuations are so expensive that one really needs to be cautious while buying it at current levels. I would be more comfortable buying it only around at 850 type of levels, which is much lower than current levels.
All right, that's the take coming in from Shahina as well for Tube Investments. On that note, thank you Kunal as well as Shahina for joining us on Buy Now Sell Now today, giving us your view on the market, sharing your top picks and also resolving viewer queries. All right, on that note, we'll slip into a break in this edition of Buy Now Sell Now, but stay tuned, more news on the other side, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and let's talk about Bharti Airtel. Bharti Airtel, as a part of its One Home strategy, is set to acquire about 20% stake in Bharti Telemedia from Warburg Pincus. This transaction is actually aimed at consolidating the company's customer-facing products, services, as well as businesses under the same holding group. We have Sunita joining us to take us through the significance of this. Sunita, tell us the latest move that is coming in from Bharti Airtel.
Bharti Airtel is buying out 20% stake from Warburg Pincus in their DTH business. Deal is pegged at over 3,100 crore rupees, and 70% of the deal roughly will be paid in terms of shares, while the rest of the money will be paid, roughly about 930 crore rupees will be paid in cash. DTH is an integral part of One Home strategy for Bharti Airtel. They have roughly about 18 million customers, and the company seems to be working towards putting all its digital asset under one roof. The company has also formed a committee to look at how the company's organization should be done, deorganization done, to basically create a parallel digital company with a telecom company. If you remember, in recent interview to Economic Times, Sunil Bharti Mittal, chairman of the Bharti Group, had said that they are looking at unlocking value, have a parallel digital asset under one company and telecom company under one roof, so that there is no regulatory overhang of the telecom business on the digital business, and possible unlocking of the business can be done. He has also hinted at possible listing going forward. So we'll have to wait how this pans out, but this DTH buyout seems to be part of this strategy, and we'll have to wait what the committee decides on the reorganization of business.
All right, thanks for that, Sunita. While we're on the topic of Airtel, let's just get you the CLSA view, because they're quite upbeat on the stock, maintaining a buy stance with a target at 730 rupees per share. So more than 20% upside available to them in the near term. DTH ahead of parallel Airtel Digital, and to buy 20% ownership in the DTH business back from Warburg Pincus will be a big trigger going forward. It's part of Bharti's larger strategy for the reorganization of the business, and shareholding structure should now see a sharper focus on the digital businesses, which of course are the future value creators. So keep your eyes out on Bharti, should be buoyant in trade, brokerage upgrades coming in as well. We now have another important brokerage upgrade to discuss. SPI, of course, this stock has been one of the top performers in the last 1 or 2 months. And typically, CLSA has been upgrading the stock since the price was around 150 rupees and targets had come in as high as 300 and 350. But today is a standout moment because it's the largest upgrade we've seen. Morgan Stanley has a 600 rupee target on SPI. Quite a courageous one to put out, but it's a very prominent brokerage. Don't underestimate the cyclical upside is what they have to say about SPI. There's a lot of SOTP value here as well in the subsidiaries. Asset quality continues to surprise better than expected. Macro backdrop for banks is increasingly looking like the early 2000s in their view. And against the backdrop, this particular bank offers significant upside. And it's still trading at a very low core price to book value in Morgan Stanley's opinion. So their bull case actually projects 100% upside. And that should have SPI in focus as well. But it is the season of upgrades, and Morgan Stanley seems to be talking about a lot of financials, not only SPI, but they've also come out with a very interesting note on mid-size NBFCs. My colleague Vivek's now going to walk us through the fine print of that. Hi Vivek, what are you picking up from this note?
Morgan Stanley has released a very interesting report on the mid-sized NBFCs. What they are saying at this point of time is that they expect the environment to turn further favorable as far as the mid-sized NBFCs are concerned. Remember, they like 5 stocks within this particular universe: Aditya Birla Capital, Shriram City Union Finance, PNB Housing Finance, Shriram Transport Finance, and Mahindra Financial Services. Now, for Shriram Transport Finance and Mahindra Financial Services, they had just recently upgraded their target prices. So today, what they've done is they've increased the target price quite significantly for the other three. So Shriram City Union Finance has seen its target raised to 2,175 rupees from 1,480. PNB Housing Finance target price raised to 600 from 495. Aditya Birla Capital target price raised to 143 from just around 115. Now, what they are saying is that Aditya Birla's return profile across segments, lending, AMC as well as insurance, has been improving quite steadily. Now, what they are saying.
Thank you, Vivek, for getting us that brokerage note. Moving on now, India prepares a plan ahead of its crucial meet with Kane Energy CEO today. And what could come up in this meeting? My colleague Ruchi Bhatia is there with all the exclusive details. Good morning, Ruchi, and take it away.
This is the story that you first heard on ET Now. We just yesterday told you that Finance Minister Nirmala Sitharaman will be skipping the meeting with Kane Energy CEO Simon Thompson. He is set to meet, however, top Finance Ministry officials and the meeting will be led by Finance Secretary Ajay Bhushan Pandey. Just ahead of that, India is getting ready and preparing its strategy as to how will they proceed with respect to the Kane Arbitration Award. Remember, the Permanent Court of Justice had given an arbitral award of $1.2 billion in favor of Kane Energy, and thereafter we've seen Kane Energy not even writing a letter to the government of India threatening seizure of the Indian foreign assets as well, overseas assets as well, but they had also filed multiple suits in US, UK and Netherlands as well. We give it to understand that the government today is going to use this opportunity to hear out Kane CEO. However, despite that, it is likely that the government is likely to file an appeal against the order, the arbitral award of the Permanent Court of Justice because they feel that the grounds on which the award was given questions the sovereign right of India with respect to taxation, and on these very grounds it is likely that the government is likely to file an appeal. If that happens after Vodafone, this is going to be the second high profile tax dispute case where the government could question and could appeal against the award that was given by the arbitral court. Having said that, today Simon Thompson at about 1 p.m. will be meeting Ajay Bhushan Pandey, top Finance Ministry officials, and will be discussing how to take the Kane tax dispute forward.
Okay. Thanks for that. I think it's time for a quick break here on Buy Now, Sell Now. We'll be back shortly. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And to understand the demand trends in the textile industry, we caught up with Dollar Industries MD Vinod Kumar Gupta, who shared that the industry is seeing a shift in consumption habits post the pandemic as work from home has boosted demand for casual wear. Listen in.
Can you start with giving us some color on the demand trends that you've witnessed in your sector and your company for both innerwear as well as leisurewear segments?
During this pandemic, it's been a new phrase that has come out like work from home. It's been very popular during this pandemic time. And this has helped in sustaining operations of so many big companies where people have been allowed to work from home, so that they can keep their organization working. So once this concept of working from home is there, this athleisure and the comfort wear become extremely popular, and we have witnessed very huge demand of these athleisures in the market. And the trend has been also indigenous hue, and therefore there is really a very, very good demand of these athleisure products into the market post pandemic is on, because these clothes are multi-purpose clothes, and people can also carry out most of the activities without having change of the clothes. so they are particularly very much useful to them. And additionally, this NOVR is also, of course, of a basic necessity. So there has been, there can only be a deferment, but then ultimately people will have to go in for the purchase of NOVRs from the market, or the online or the offline. So the demand post-pandemic for our products and for the industry as a whole has been really very good.
It's 11:52. It's time to address the quiz question on BNSN Quiz Connect and the answer as well. Our question to you for this week, or this day's episode rather, was which of these FMCG giants saw the highest volume growth in percentage terms in Q3 FY21, which is the quarter that just went by? The options were Colgate, Emami, Dabur and Godrej Consumer. The correct answer is C, Dabur. And we have three of you who were fastest finger first and got it right. Deepak Kumar, Amandeep Singh Sidhu and Sanjay Tamrakar. Congratulations to all three of you, a hearty one at that.
And let's talk about sports. The Indian Premier League 2021 or the IPL 2021 season is officially on, as the IPL auction will get underway in Chennai today. Only 292 players have been shortlisted for the IPL 2021, out of which, for IPL 2021 auction, out of which you will have 164 players which are Indian and 125 overseas players. My colleague Jayesh is here with all the details. Jayesh, you're all geared up for IPL season?
Absolutely, the IPL edition 2021 will kickstart proceedings today with the auction in Chennai at 3 p.m. Now, like you mentioned, 292 players are to be auctioned, out of which 164 are Indian players. But it's important to look at the teams and who has the big money to spend on these players as well. So starting at the top of the list, you have the Kings 11 Punjab, who have more than 50 crores in their kitty to spend in today's auction, followed by Rajasthan Royals and the Royal Challengers Bangalore, who have more than 30 crores to spend, along with the fact that Chennai Super Kings, Mumbai Indians as well as Delhi Capitals have anywhere between 13 to 20 crores each to spend. While the bottom of the table includes Kolkata Knight Riders and Sunrisers Hyderabad, who have less than 11 crores to spend in today's auction. So these will be the teams in action for today's auction as well. Let's have a look at some of the key players that are to be auctioned. From the batsmen, you have Jason Roy along with Steve Smith, who are have a base price of 2 crores each, along with Alex Hales and Sean Marsh, also 1.5 crores, and then you have Aaron Finch at 1 crore. From the bowlers, you have Harbhajan Singh along with Liam Plunkett, who have a base price of 2 crores, along with Morne Mokil as well as Nathan Coulter-Nile with 1.5 crores each. Not much to talk about in terms of wicket keepers, but you have Sam Billings, Alex Carey and Matthew Wade, which will be available for the auction. But it's the all-rounders that will be the most important aspect of this auction, because you have many players, the likes of Shakib Al Hasan, Kedar Jadhav, Moeen Ali, as well as Glenn Maxwell, which will be available, and all of them come with a base price of 2 crores each.
Okay, Jayesh, thanks for that. Of course, IPL season kicking off. We're all big cricket fans here, especially at ET now. So we're really looking forward to the upcoming IPL action. And I'm sure Jayesh will be bringing us more updates as we draw closer and throughout the season as well. But on that note, completely out of time here. Thank you for watching me and Cheryl for the last hour or so. And we'll see you again tomorrow. Stay tuned to ET now.